Okay, very well, ladies and gentlemen, welcome back to another cast with trend following Tyson. So the markets are in a correction state and we got a remedy for that. Okay, we're in defensive mode. We're going to go in defensive mode. We're going to trade like Floyd Mayweather. As you guys know, Floyd Mayweather, one of the most defensive, is a defensive fighter, but one of the most decorated fighters, actually one of the best fighters in today's time. You know, Floyd fights defensive, but he still knocks his opponents out. He fought defensive against Conor McGregor and he still stopped him. I don't know which round he stopped him in, but you know, we can trade defensive and we can still knock our opponent out. We can trade defensive and we can still make money inside the markets. We can still be on the offense. We can still trade defensive, but we can still make our point clear. Okay, so let's look at some defensive traders. Let's look at some defensive millionaire trend following traders that took on a defensive approach, and let's see exactly what we're dealing with here. Okay, so let's take up some trend following psychology from none other than Bruce Kovner, and we'll jump right into this trend following criteria. So whenever I enter position, I have a predetermined stop. That is the only way I can sleep. I know where I'm getting out before I get in. The position size on a trade is determined by the stop, and the stop is determined on a technical basis. I never think about stop vulnerability because the point about a technical barrier, and I've studied the technical aspects of the market for a long time, is that if the market shouldn't go there if you are right. Guys understand that? All right. And we'll look at one or two quotes that are gonna kind of exploit that further on, okay? All right. So let's look at something else. Risk management is the most important thing to be well understood. Undertrade is my second piece of advice. Whatever you think your position ought to be, cut it at least in half. So we're under trading right now, guys. That's our first and our second defensive. That's our second defensive thing that we're doing, is we're under trading. First, we're going to get out. We're going to know where our stops are before we get in based on a technical basis. And then second off, we're going to under trade. So we're using two defensive mechanisms right now. If you don't work very hard, it is extremely unlikely that you will be a great trader. We're working hard. Every time we get in this damn thing, we're working hard because we're looking at greats and we're just trying to resemble greatness. Okay. The first rule of trading, there are probably many first rules, is don't get caught in a situation which you can lose a great deal of money for a reason you don't understand. Okay. So don't lose a great deal of money while we don't understand. First off, go to the first quote we just looked at from Bruce Kovner, getting into a trade for a reason we don't have a predetermined stop, so we don't know where the hell we're getting out, so we don't know why we lost a lot of money in the first damn place, because we didn't have a predetermined stop that was based on what happened with the trend. So we get our entry and we say, look, we're getting out here based on the trend, no matter what the hell, whatever the case is. And that's going to be based on our position size. The trend where we get out, say, hey, we're getting out on the trend based on, we're getting out of this trend based on this technical basis where the trend should not go. If it's going to continue, the trend shouldn't hit this point. If the trend's going to continue, it shouldn't hit this point. Okay, so we based our exit off of that, and we based that exit off of our position size, off of how much we can afford to lose. So if we say we can only afford to lose, this trade shouldn't go to this point on the chart and this point on the chart. Let me show you something. If we say, look, we're getting out right here because based on the trend, it shouldn't hit here. If the trend's going to basically continue in the first place, it shouldn't even get to this point. Technically, if the trend's going to continue based on this trend, it shouldn't hit this point. Okay, so that's 440. So based on, if you have whatever position, however much your account is, you know you have a $60 cent stop here. Based on this technical basis, you need to fit that 60 cents into your position, into your account size. So rather you're going to take 100, rather you only can lose $60. So you're going to take 100 shares of this with a 60 cent stop. That's your $60. Okay. Because every tick of that is $1. So you can only afford 60 ticks right here at $1. All right. Understand that, guys. So taking up this greatness from Bruce Kovner, thank you very much for this. Really good stuff. Place your stops at a point that, if reached, will reasonably indicate the trend is wrong, not a point determined primarily by the maximum dollar amount you are willing to lose. This is the defense we're going to use, you guys, because we're going to enter these trends and we're going to enter this momentum. But if we get stopped out based on the trend, that's okay. But if we don't, then damn, we just knocked out another opponent on using defense like Floyd Mayweather. We entered this trend at a small with undertraded in the first place. We're trading smaller because the market is correcting itself, but we're still following momentum and we're still following entries. And if we don't get stopped out, we're still going to be knocking our opponent on their ass. We're still going to be taking points from the market, okay? We're still going to be exploiting the market, okay, with our process. So here we go. Let's start the trend picture off with DHT. I like this thing for continuation to the upside with the stop that we just discussed at 9.50 at 440, okay? Based on the trend, this thing should not touch that point. And we can even close in try to see from what point we're looking at this, okay? So based on the trend, we shouldn't hit that point there, and we already discussed that. So we're going to go ahead and rock out with DHT. I like that thing for continuation. And let's see what we can get out of there, okay? Things kind of going crazy. All right. So here's our stop. 456. And then our last line of defense, we really shouldn't get to 430 and then 410. All right, that's a quite bit of a stop, but technically we'll use this right here, 440, 435, okay, and let that trend continue. If it's going to continue, then if we don't get stopped out, guys, that is going to be our defense in this market time that we're in right now, okay? If we don't get stopped out, then let the points add up, and that's our defense. That's how we're going to exploit the market. So I like this thing for a long. All right, where it's at now, kind of continuing at the top of that chart, HLIT. All right, with a stop below 540 and a stop below $5. All right, should get you out of that thing. So HLIT for continuation. All right, and you see it's at the top part of that chart, at the top right on that yearly. So definitely strong, minus the point we're in now. Let me show you guys something really fast on DNR. All right. We were trading this thing back here. Okay? Remember when the market was all shaky? This isn't the first time that the market has got all undecisive of itself. And this is something we were trading when the market was undecisive. When the tariffs started first beginning, everybody thought the market was tanking then. You guys remember that? Another reason why we don't follow news, we just follow signals. DNR was giving us the exact opposite of what, let me make another point. We're going to be using this oil and gas as a defensive mechanism for what the market's doing right now. We're going to be using some of the stronger oil and gas plays, and some of these other players that are showing momentum despite this corrective state that we're in, so to speak. So as you see, DNR, if you would have stayed long on this thing, you already doubled yourself here at 646. We were long at $2.50 and at $3 here, and if you would have took a long on that and just sat tight, you'd have doubled yourself and started digging into some more upside. So DNR, I like that thing for a long now with a stop at 6. Okay, so you could have sat tight on DNR minus all the crap that was going on, and you still would have made some points there. Beautiful continuation. Let's take a look at NOA, something that we were looking at coming into the week, and just an absolute freaking beast. Okay, so despite what the market is doing, let's play some good defense. Let's use our stops, our predetermined stops. That way, when you get in a trade, you're not confused about what the fuck is going on, where you're getting out, why you're lost, all this money, you don't have a clue where. You have a predetermined stop to what you're going to lose, of how much your max loss is already put into this thing. You're getting in right now at 1170 with saying you can lose $50. So we have a 40. If you bought 100 shares right now and you gave yourself, if you bought 1,000 shares right now, okay, and then you gave yourself a stop right here, and we're going to use this as a stop, 1130, okay? That's $400 stop, okay? Add that into whatever your account size is into 1%, and you're going to come up with your 1%. If you have a $400 account, you can't afford no more. If you have a $400 account, your max loss is going to be $40, okay? I'm sorry, if you have a $4,000 account, your max loss is 40 because you're at 1%, which means you can only buy 100 shares of this thing with a 40-cent stop right there. Okay. All right. There you go. And every time you cross, every time that stock adds 40 cents, you added 1 R. You made a win of 1 R. If you had a 40-cent stop right now on that stock and that stock went to 12.10, you made 1 R. And if it went to 12.50, you made 2 R's. And if you get stopped out at 11.40, you got a loss of 1 R. Okay. NOG. Trend following Tyson, guys. You guys, we're trying to make points. We're trying to follow these greats and make some millions here, make some billions, fire our bosses, okay? So let's trade defensive, but let's knock this fucking market out, all right? I like a stop here at 390, 385, and just let that continuation just ramp up. NOG, follow the continuation and the strength there, okay? Follow nothing but momentum right now, guys. Following nothing but momentum. IMMP was looking quite decent, and then it started pulling back, but it's still looking quite decent. Okay, so I like to buy that pullback. And remember, as these charts continue, guys, when the market's all croggy like this, we'll just look back at this and say it was another pullback. So whatever's going on, people are calling it a correction, this, that, and the third. Okay, that's fine. We'll be buying those with signs of continuation, and when we look back 3 months from now, we'll just say, hey, we bought corrections here, we bought pullbacks there. It wasn't like the market was going red and we were ready to kill ourselves like everybody else. Right now, we're mostly in cash. Of course, we're mostly in cash. We got stopped out of most of our positions, but we're still trading defensively. We're still getting out on predetermined stops, taking smaller positions, but knocking the market on its ass. If these trends are going to continue, we do not touch them. Okay? IMMP for continuation with a stop below 320. All right? We've hit plenty of home runs, and one of these, maybe a handful of these stocks will still be home runs. I like to follow the momentum on AMRN, okay? I like to follow the momentum on AMRN, okay? Let's keep this one going here. Follow the momentum on this damn thing. Remember I said, if it gaps up, well, so be it. We just won't buy the gap up. Let's buy some continuation. We could have bought the continuation going into 11 and sat tight. Trend following, our process absolutely freaking works. We can take it back and look on every chart and see if we would have worked our process, but what would have happened? We take an entry on continuation, stop ourselves out. If we don't get stopped out, we don't freaking touch our position. Okay, AMRN for continuation. ATRS is one of my winners right now. A current winner I'm long on, and I'm totally enjoying this thing. All right, took a long here. Remember, I told you guys we were buying pullbacks and long-term uptrends. Long-term uptrends, we learned that from Larry Tintorelli. Buying pullbacks and long-term uptrends is a freaking default trade. We looked at the chart, remember, just like Bruce Kovner said, based on the technical basis, where that trend should end is where our stops are at. We learned that from billion-dollar advice, Bruce Kovner. Our stop's going to be underneath this, guys. If you were to take an entry, I wouldn't buy this now. I bought this when it pulled back in this area, and then I got the continuation. I wouldn't buy this just now, or it might continue through there, but you may get stop hunted. You may get stop hunted. This thing may start making a correction back into here before it starts setting its next higher high based on this thing. Sets higher highs and pulls back, higher highs and pulls back, and then it started pulling back here and rolled this trend line up, so to speak, and we bought it down here, and then it made another higher high. So let's see what happens with ATRS. Definitely a winner inside my portfolio, and I will be sitting tight. Let me teach you guys a lesson really fast on trend following with Tyson. Look at this. We took an entry on this thing at 750. This thing dates back on our show to 750 when this thing first started cranking up right here, our favorite signal, higher highs and lows. Bought it here, and look, didn't get stopped out. Never touch your position. If you don't get stopped out, that's our defense right now. Don't touch your position. Let them run. Let them quadruple themselves. This thing quadrupled itself. This thing is 4 times what it was worth. This thing is almost 5 times what it was worth when we bought it here at 7, and it's at 33 now, 34 now, okay? Intelsat, another home run. And remember, this was back in all this time when all the other correction stuff was going on. This is why I say I like to buy stocks that are showing strength inside of a down, undecisive market. When everyone's selling their positions off and all the stocks are undecisive about themselves, let's just buy what's showing some strength and some continuation. Let's not buy the crappy stocks, but let's buy what's showing us it's going to continue, what's showing us strength. Okay, CSBR, remember I told you guys I was adding back here inside this pullback, higher highs, pullbacks, higher highs, pullbacks, higher highs, pullbacks, higher highs, pulls back, higher highs, pullback, higher high, pullback, and I said This pullback is just a part of all this. I said, let's add here based on we get continuation like the rest of the chart has been doing. Technical basis, we never got stopped out on our technical basis. We gave it some space down inside this area here, and continuation on that thing. And I like CSBR for continuation. I really like that for continuation. I'm long, another winner in my portfolio, so I bought it breaking out up into this space, and it pulled back, and I started adding more inside 13 and going up into here. So I like continuation on CSBR. Business as usual. DERM, something else that's really beautiful. When we look at the, believe me guys, some of these things are gonna, look how long we've had Intelsat on the show. It's been here for about however long it's been trending. As long as things are to the upside, we're still long on them. DERM might be here for the rest of the year. If this thing dares to break up inside this chart, and we've seen it 100 times, this thing lifting off, I definitely like a freaking long on DERM right now. I like a long on this right now as we're eating up inside this pull, back inside this chart. We may take all this back. We've already started taking some of it back from right here. We pulled back to 937. We've already taken back 3 points. We may continue to take back more points. Okay. DERM for continuation. I really love that thing. It's sitting on top of all this stuff here. It's already sitting on top of all this. So I like it to hold that, and for continuation, give yourself a stop at 12. Okay. NSU holding up, gapped up, and showed some continuation. Let's buy it right now. We just looked at a stock that gapped up and continued. Okay, so it gapped up, showing some continuation. Let's buy it now, and let's stop ourselves out below the gap up, 435. NSU for continuation. Really good looking stock right there. Remember, our defense for right now, while the market's uncertain of itself and correcting and everybody's selling off their positions, people are ready to jump off of cliffs and all this type of stuff. Let's just trade the strength, okay? Let's just follow the strength. BRFS, this is this Brazilian meat thing, breaking up into this, showing some strength here, bottomed again, and now it's starting to show some consistent higher highs and lows. I like this BRFS to start breaking into this chart, to start adding some higher highs and lows. BRFS, and we will be sitting tight. We have small positions, so we're not worried about all the little small fluctuations. Trend following, you guys, from my point of view, is the only and the best way to trade the markets and how to get an absolute return. And an absolute return is when you can make the most money you can make. And to me, it's buying something at freaking $5 and selling it at $100. Buying something at $5 and selling it at $50. It's not all the little fluctuations inside the day. It's riding the bigger picture, riding the predominant trend. And we've seen, how many millionaires and billionaires have you guys seen on this show that use these trend following principles? We're looking at the principles these gentlemen use, and we're breaking it down, and we're using it today. Okay, stop yourself out below 1650, below that trend. That trend should continue, and it shouldn't hit that level based on like what Bruce Kovner said. CDXS, and I like it because it's at the bottom portion of that trend right now. So CDXS for continuation. So this is a billion-dollar game, and we use, and in my opinion, we use the right approach to make the millions and to fire our bosses. Trend following is the perfect approach to make an absolute return. I believe Michael Marcus turned hundreds of, most of the greats turned a few $100 or a few $1,000. It's to hundreds of millions of dollars. No crap, no bullshit there, okay? I like CPE long for continuation. This is another one of these oil and gas things showing continuation, okay? Oil and gas showing a lot of continuation. A lot of selective names inside oil and gas showing nothing but continuation. And we're going to follow. We're going to sit tight right with those guys too. We're going to sit tight with the continuation. This thing may be bottoming out and may start to turn itself around here. I like this to start taking along now, and prices may start reversing off of this. All of our home runs have came from these type of setups. Okay, long time downtrends, and then we start turning around in price. We hit the bottom here and we start turning around. So I like to take a long on this now, and let's just see what happens. Let's take a stop below 855, and if we don't get stopped out, let's never touch that position. Okay. CVIA. And when you set your stops, you don't micromanage your stops. That's why I hate micromanagers. Don't micromanage your position, guys. If you don't get stopped out, don't freaking touch it. Don't micromanage it. And plus, we learned from Bruce Kovner, especially in a time like this, we're under trading, so we have smaller position. So we're not worried about all the fluctuations. Every time it goes down this way, oh God, we're ready to cut our position because we're watching the capital in our account. No, we're not doing that. We're getting out based on a technical basis, okay? DM, energy, just riding this freaking wave. Look at this thing, so strong. Look at the strength there. I like to follow the strength on DM. Let's get a stop out below 1775. Give ourselves a lot of buffer space on that thing. And if we don't get touched, if we don't get stopped out, and we look, if we open our account and we still have our positions long, they should be green. Because if you don't get stopped out, then you're out. If your stops are in and you open your account, then the positions are gone. Obviously, you got stopped out with your max loss you had. But if you look in your position, obviously those are positions are, if you look in your account and you open it and you had 10 positions you put on, you got 5, those 5 positions should be green. And no doubt about it, they'll definitely wipe out those 5 little small losers. When you look at trends like this that are quadrupling themselves and value from our entries, quadrupling, we're going to definitely wipe out those small little 1% losses that we took, okay? Based out of 10 trades, and 5 of those things quadruple themselves, all right? DNOW, I like that for continuation. Just looking really well there, okay? ENDP, let me show you guys a lesson. Let's learn the lesson really fast. Trend following Tyson. We took an entry on this because it had the same structure we've ran and seen on all of our huge winners, just this higher highs and lows. Let's not make rocket science. Let's say, oh, I only need a head and shoulders to buy that. No, we don't need all that. We just want to enter this trend. We just want to get on the bus stop and let the bus pick us up, and let's just go with it. So this thing looking really well. ENDP, we looked at an entry from 9, you guys, way back here, and I said, let's buy it. I like the strength. I like the continuation. I like the setup. We took along. Look at where we're at now. If we don't get stopped out, that is our defense. Our defense is the stop. Our offense is the continuation that we're sitting inside of, okay? ENDP just shows our process is golden here. If we don't get stopped out, let's sit tight and let these positions triple and quadruple themselves. We don't have a price target because we don't know where these things are going. We don't know these things are going to double and quadruple themselves. So we can't have a price target. Huh? You got all that? So the market wants to play? Okay, let's play. You guys want to play? Let's play. You guys want to play? Let's play. We got a remedy for that. We're going to trade defense. We're going to make some points back. You want to do this? Then let's do it. All right? We're ready for war. We're ready to get this thing rocking right now. So let's go. All right? How you guys want to do this? We're ready to trade defense. Ring the bell. Ding, ding. We're not going to go running. Let's play. We got a game plan. If you don't got a game plan, maybe you're one of those guys that are running scared. We're not running scared. Bring it on. All right? We're going to keep taking our entries, taking our signals, and keep manning our stops. Respecting our stops, okay? GOGO for continuation. I like that thing with a stop below 450. Below this gap up. This is the first line. It should hold that, and then it should hold this. So let's stop it out below 5, below 485, okay? GOGO. Look at one last stock, and you guys enjoy your weekend. Come back, watch my show, and learn some billionaire tips and learn how they work, because we're looking at right here how they did work and how they didn't work. All we're doing is sitting tight if we're not getting stopped out, guys. Basing our stops. If we don't get stopped out, hey, our defense, hey, we'll set a stop. If the market hits it, so be it. I expect the market. Go ahead, hit my stop. If you don't hit my stop, guess what? I just knocked you out. All right, HLX for continuation. This oil and gas showing a lot of continuation. Showing a lot of strength, you guys. About to break out above this level here. And then the move is on and moving, okay? I like a stop out below 950. Remember, don't trade really big so that you can have a larger stop for some correction space. Some wiggle space, okay? So HLX. And then what do we use? What are we going to use in reference, since we're not trading really large? Let's put on some more positions. So since we're not trading really large, we're not getting really large returns back on every trade. Let's just have a few more positions working in our favor then, okay? Put on a few more trades. That way we might take on a little bit more risk, but it's still 1%. And then let's let a few more positions work in our favor since we don't have as much weight on these things, okay? So happy trend following, happy trading, you guys, and I'll see you guys back here in the week, and we'll see what continues and let's see what's not. But these oil and gases are really working, you guys. So let's work with what's working and let's trade what's trading well, okay? So manage that risk, trade defensive, and I'll see you guys back here in the week, okay?